Is 2023 a good time to buy a house? Right now, interest rates are at 7% for a 30-year fixed rate mortgage.
Worth recapping here, the Federal Reserve unanimously deciding to pause rate hikes today. However, pointing to the likelihood of more increases this year as officials continue to battle elevated inflation.
The Federal Reserve early this week decided not to increase interest rates. Many experts believe that the Federal Reserve will not increase interest rates for Q3 and Q4, but who knows what they will be in 2024. Aside from that, we don't know if it's a buyer's market or a seller's market. Inflation is still kind of. In 2022, inflation was at 6.5%, and in 2020, it was at an all-time low at 2%. Aside from that, we need to look at your personal finances to see if you can really afford to buy a house in 2023. Do you have any savings? Do you have any 401k? By the way, while you're here, you might as well hit the like button and subscribe to get more content. Homes are sitting on the market for 50 to 75 days on average. Compared to 2022, it was only 30 days. Also, a lot of sellers who have homes on the market have reduced the price of their homes as much as 10%, sometimes as low as 5%. Some may argue that it looks like it's a buyer's market. Well, that very well may be true. So as a buyer, you must be really careful to pick and choose the right type of house to buy. You do not need to rush. Now, some may say that it's a seller's market because of a lack of inventory. Now, if you have a beachfront property and the seller is trying to sell that property, it's only so much beachfront property you're going to get. So the seller may ask a premium for that, and the buyer may pay the premium because the buyer knows that they can't get this property anywhere else. However, never overpay for a property because that can put you in a bad financial situation. So in 2022, you had a lot of buyers overpaying for homes, and the sellers got over like a fat cat. Do you know that according to a Hippo Insurance article that I read, it said that 78% of all buyers who bought homes in 2022 regret buying homes, and 68% of all those buyers wish they would have waited to buy a house knowing what they know now. So that tells you that there is some buyer's remorse by being too aggressive when interest rates go down. So be careful. The second thing to consider is your personal finances. Now, within this, we have to look at inflation. Inflation is a critical factor. Inflation in 2023 is at 4%. Last year, it was at an all-time high at 6.5%, and the inflation in 2023 is still higher than what it was in 2020. Now, the question is, what is the cause of the 4% inflation? Well, we're going to dive into it right now. It comes from two main things. Number one, interest rates in 2020 was at damn near 0%. So you had a lot of aggressive buyers buying homes. We had a lot of people going to the banks to borrow money at such cheap rates. They were able to buy more things, which increased the price of these goods that people buy. The second main thing is the pandemic, as we all know, which happened in 2020, but the government gave out over $800 billion of COVID relief. Now, what do you think that did to the economy? Well, everything increased in prices, and it caused the inflation to be at 4%. So inflation typically has two parts. The first part is food, and the second part is energy, and the energy part is just gasoline. Obviously, it's the summertime, so more people are going to be going on more trips, taking more road trips, flying more trains, all type of stuff. So therefore, gasoline prices will increase. Also, there's a new type of grade, or just a grade that producers of oil make to make the air less polluted, so therefore that increases the price of gasoline. Aside from that, gasoline is used to carry truckloads of cargo for boats that's traveling cross country, and also for railroads. And these transportation mediums have cargo in them. So let's say if you are a banana company like Chiquita, who's getting bananas exported to America from South America, and they have to spend more on gas, that means that they have to charge higher to the consumer for these bananas, which in effect is inflation. And therefore, when a person go in there to buy your banana, you're like, man, why is the banana cost $1? I just paid 50 cents for it last week. That's inflation. So as we carry along. Okay, now we have to look at savings. When you're approaching to buy a house, obviously the bank is going to say, look, what is your debt to income ratio? It must be no more than 43%. Now, how do you calculate your debt to income ratio? Well, you add up all your monthly debts and divide it by your gross before tax income, and that gives you your debt to income ratio. Now, typically it's at 43%, but in my view, I think it should be lower than that to help you accommodate for high inflation and for other unexpected things that come up. So how do you go about increasing your savings? Well, number one, you want to make sure you have at least 6 months worth of reserves. In my view, I think you need 12 to 18 months. Forget 6 months worth of reserve, actually. So the more reserves you have, the more financially secure you'll be down the road. Secondly, pay down as much credit card debt as possible. Not only does it have a high interest rate, but also you can save more money that way. Now, another thing is, if you have cash, you should really consider buying your home all cash. Now, you can save almost 4 times the price you're going to pay for the house if you buy it with all cash. This will help you save tremendous amount of money that you can use for all different other types of purposes. Okay, the last part to this, to your personal finances, is layoffs. I mean, as we've seen in 2023, we've had almost 170,000 layoffs this year alone in the tech space. I mean, Amazon was one of the companies that laid a lot of people off. Meta or Facebook laid a lot of people off, and a couple of other large tech companies laid a lot of people off. So the one thing you have to consider is, what type of job do you have? Do you have a low-skilled job, such as a dishwasher or a package handler? And if you do, what do you think you need to do to be able to get a high-skilled job in an industry that you think will be here for a long period of time? Well, the only way to think about this is to improve your skills. And to improve your skills, you have to invest in yourself. Now, you may not have the actual money to do it, but you can always go to the library. You can get free internet somewhere and read and understand what skills you want to do and go down that pathway. Now, let's say if you are a high-skilled worker, let's say you had a job at an Amazon or a Facebook doing a high-level job, and because they just downsized, that means that you were one of the ones to go. The one thing you have to do in your job is to ask for more responsibilities. You must essentially be a master at your craft. Take on more group projects. Try to be very good at what you do. If that's taking up more classes in that specified field that you work in, then do that, and that will help you solidify your job long term. Even if that job still lays you off, at least you will have more skill sets with the skill sets you already have to easily get a job. And that's how you become bulletproof in our current economy. So there you go, folks. The personal finances is really important for you to assess whether or not you can afford to buy a house in 2023. If you cannot afford to buy a house, then don't do it. Save enough money and do what you got to do from a personal financial standpoint to do so.